Hello and welcome. This is Darren Bauer from Mortgage Intelligence and TorontoMortgageSite.ca. We're going to have another educational video today, and topic is mortgage refinancing, which is a very popular transaction in Toronto and Canada for that matter. And we're going to talk about why clients refinance their mortgage, how do clients save money by refinancing, what is the process, and what are the costs and fees. So why refinance a mortgage? Well, typically clients will refinance a mortgage to get a lower rate than the existing one they have. They want to lower their total monthly payments, and a lot of the times this is done by paying off high interest, high payment debts they already have besides their existing mortgage. So credit cards, credit lines, car loans, personal loans, etc. Many people refinance to take out equity to renovate a property, take out equity to invest into the stock market, mutual funds, RSPs, for example. And many people buy additional investment properties using a refinance to get down payment out of their existing property, getting the cash for down payment on a new property. And then there's other purposes as well. You can refinance for a variety of reasons. Lenders will allow you to take out money for personal reasons as well. So in this chart we can see that there's been quite an increase in home prices, over the last 6 years, for example, which means more equity in properties in Toronto especially, and in Canada in general. So when there's more equity in your property, you obviously have a better chance of refinancing because you need equity to refinance. So typical refinances are 80%, up to 80% of property value. So these home prices that have gone up a lot lately have given people the equity in the property to refinance now. And along with the increase in prices, home prices, there's been quite an increase in personal debt. So this is with the credit cards, credit lines, car loans, etc. Generally, people have borrowed a lot of money after buying a home, typically because they need items for the house after they purchase it. Furniture, electronics. Maybe they used a credit line or credit cards to renovate the property, etc. And after a while, these add up, and they're high interest debts. So in the last 10 years, you can see from this chart, there's been quite a spike in personal debts for Canadians. And at the same time, there's been a significant drop in mortgage rates. We're pretty much at historical lows right now. So you've got an increase in house prices and equity, and you've got a drop in interest rates. Pretty much makes it a good time to refinance when you've got debts outstanding that are costing you money in interest and monthly payments and cash flow. I'd like to say a general rule is probably around, once you hit 20 to 30,000 in personal debt, so credit cards, credit lines, etc., you should start looking at the opportunity of refinancing to save money. So how to save money on refinancing? Well, you're typically going to be paying off a higher rate mortgage. If you took out your mortgage in the last 4 or 5 years, for example, maybe even 3 years, you probably have a higher rate than today. Now, credit cards, loans, etc., those are almost certainly higher than a mortgage. So high rate credit cards, they're anywhere from 10 to 18% on average. Any personal loans, for example, probably around 10%. Car loans can average around 6%, for example, as high as over 10%, depending on credit ratings, etc. So by refinancing, you're saving money on interest and you're improving your cash flow. That's money in your pocket at the end of every month, and that's what the key is really when it comes to refinancing existing debts and in a higher rate mortgage. So in this example here, we can see that before refinancing with a property value of, let's say, 400,000 and a mortgage balance of 240,000, old rate of 5.5%, The old monthly payments would be a mortgage of $1,353, credit cards of $600 a month, and car loan of $600 a month. Your total monthly payments are $2,500, basically. And after we would refinance, we would increase the mortgage balance by, let's say, $40,000 in this example. So we're paying out the existing mortgage of $240, plus the credit cards and car loans of $40,000. So we're increasing the mortgage to $280,000. And at today's rates, let's say you did a variable rate around 2.5%, you'd have a new monthly payment of $1,105. So this is a significant savings over your previous scenario with your personal debts, your credit cards, and car loan. You're increasing your cash flow. That's money in your pocket at the end of every month by $1,448, which is quite a bit. And that's not including on this particular picture here. That's not including interest savings. So you now have a rate of 2.5%. To pay off all those existing debts you had before, especially the credit cards, which can be, like I said, up to 18%. So there's a very large interest savings when you refinance personal debt. So the mortgage refinance process, pretty simple process, very easy nowadays. What we do is we verify existing mortgage and property details. We would start a mortgage refinance application, which really takes minutes nowadays. It's not that long. Online application on my website is very easy. And we would submit the required documents we need to the lender. Okay, we would get the mortgage and property value approved. You would need to hire a real estate lawyer, or we can recommend one for you. And to refinance takes roughly 2 weeks. About 10 to 14 business days on average. So documents you will need. Typically what we need is a copy of mortgage statement, property tax statement, home insurance for income purposes to verify income for the lender. A lot of times employment letter and pay stub will do if you're on a salary, for example. Sometimes a lender will require some tax documents, so maybe a notice of assessment for the last year or two, or maybe a T4 from your employer, T1 general, depending on your income scenario. And then there's identification, so a driver's license and or maybe a passport or birth certificate. So what a lawyer does, this is a common question people ask. What is my lawyer going to do? Well, the lawyer is responsible for discharging and paying off the old mortgage and setting up the new one on your property. A common question from clients is, do I have to call my lender to tell them I'm refinancing? No, you don't. That is what your lawyer will do. Your lawyer will send a fax to the existing lender requesting what's called a payout statement. A payout statement shows what your existing mortgage balance is. And the lawyer will also perform title and lien searches on your property. So this is done to verify who owns the property and what is registered against the property in terms of existing loans. So usually it's just a mortgage, but sometimes there could be other liens on there. So the lawyer is going to verify what is owed on that property currently. Lawyer will verify documents such as home insurance, property taxes, and your existing mortgage details. The lawyer will prepare disbursements, which are basically items to be paid. So your mortgage could be your credit card, credit lines, anything we're basically paying off with the new mortgage funds. So the lawyer basically requests funds from the new lender, goes into their trust account, the lawyer's trust account. They use those funds to pay off all your existing debts, and anything left over. So let's say you had cash left over after the payout of all debts, which a lot of people do sometimes for renovations to their property, or it could be anything. The lawyer gives you that remainder of funds via check. So typical refinancing fees. Most of the time people have an existing mortgage penalty and a discharge fee because the typical borrower has a closed mortgage. If they, 5 years ago they got a fixed rate mortgage or a variable rate mortgage, these are almost 95% of the time closed. If you have an open mortgage, you don't have a penalty. But there's not too many open mortgages out there. Typically, people have closed mortgages. So, mortgage penalty and discharge fee. The penalty and discharge are added to the existing mortgage balance and paid off with a new fund. So you don't have to pay the penalty with cash or the discharge. It's just added to the existing mortgage payout. So let's say you owed $300,000 on your old mortgage, and your mortgage penalty was $1,500, and the discharge was $300. They would add $1,800 to that existing mortgage balance of $300,000, and the entire amount would be paid off with the new funds. So appraisal fees, if necessary, roughly $300 for an appraisal if it's necessary. A lot of lenders nowadays, we can do a refinance without an appraisal. They use automated systems to check property values. But if it's a scenario where they need an appraisal, the cost, like I said, is about $300. Legal fees, those usually run around $750, $900. So legal fees change on the amount of disbursements typically. So if you're paying off, 5 credit cards instead of 1, it's going to cost more. But really in general, it usually doesn't exceed $900 for a refinance, and most lawyers will allow for the legal fees to be paid out of the new funds of the mortgage that's being set up. They might require a retainer, a few $100s or so just to get the file going, but they can typically take out the remainder fees when your new mortgage is set up, so you don't necessarily have to pay that all up front in cash. So I hope this helped you understand a little more about mortgage refinancing and how it works. Contact me anytime if you have any questions or comments. Visit my website for more information, torontomortgagesite.ca. You can call me at my toll-free or local numbers. Email me for more info. And please follow my Twitter account. There's updates on there for new products, industry news, rate updates, etc. And please share, comment on this video, share it with friends and family, business associates if you liked it. Appreciate that. And subscribe to this channel. There's always videos on the way. If you subscribe to the channel, you'll be notified of those upcoming videos. Any questions, please let me know, and we'll talk to you soon.